Right now, we are experiencing one of the most important moments in Nigerian capital market history. The Nigerian Exchange All Share Index just crossed the 200,000 naira mark, and most people still don't understand what is really going on. But the fact that we have held above this threshold for almost a month now means this is a structural breakout. There has been massive growth on the Nigerian exchange market capitalization, taking the value past 130 trillion naira as at the date this video was recorded. This is double the valuation of mid 2025, which was 65 trillion naira. This growth is not high base, it is real institutional money moving into the NGX. I must say the Nigerian stock market is on fire right now. Weekly turnover is hitting trillions of naira. Stock prices are currently flying high, and I know a lot of people are asking questions. Questions like, is this the opportunity of a lifetime or a trap? The NGX just hit 204,000 naira. So, as someone who is considering putting new funds into the market, you must have been told that the market has rallied too high from last year and it may crash maybe soon. Well, here is what they have not told you. In this video, I will break it down for you to see the actual drivers of this growth, and you will be able to make independent decisions based on the data that will show you. This video will be divided into 4 parts for clearer context. Part 1, we look at what is really driving this momentum. Let me break it down simply with bullet points. Point 1, big money has entered the market. This rally is not driven by retail investors. It is driven by institutional money.
In March 2026, FTSE Russell announced that it will upgrade the Nigerian capital market from unclassified to frontier market status. Moving from unclassified to frontier market will improve foreign exchange liquidity and NGX market accessibility. It is projected that this move will see an inflow of about $1 billion from passive funds tracking FTSE indices. This move will take effect on September 21st, 2026. In case you don't know about FTSE Russell, it stands for Financial Times Stock Exchange. They are the global financial service provider that manages stock market indices of the biggest markets in the world. I'm talking about FTSE 100 of the London Stock Exchange and the Russell 2000 of the New York Stock Exchange.
This has spurred significant foreign portfolio inflows. Also, pension fund asset management have taken advantage of confidence in the NGX to grow the fund that they manage. Institutions are currently deploying billions into large market cap stocks. When big money moves in, the market moves. This is evident in the massive volume spike and multi-trillion naira gains, and blue chips are leading this rally. It is not penny stocks at all. Point 2, dividend season is also fueling demand. Investors are currently rushing to buy stocks before dividend payouts, and that is pushing prices up quite fast. We are in peak dividend capture cycle right now. Banks, oil companies, industrial giants are announcing payouts. Investors are currently buying before the qualification dates. This has created aggressive buying pressure, and also you can see short-term price spikes. This is why banking stocks, oil and gas stocks, and industrials are leading the rally. This is the dividend rush period. The third point is banking sector recapitalization. Banks are currently raising capital, expanding their base, and investors are betting big on their future profits. You know that the recapitalization policy by the CBN from 25 billion naira capital base to 200 billion naira, that is for commercial banks alone, have been completed, I believe, by 30 commercial banks so far, which led to some banks merging up and also some banks acquiring the others. This increased investors' confidence on the banking sectors. Investors are keying in by front-running their future profits, and they are also expecting bigger balance sheets from these banks. This is a long-term structural catalyst, not just hype. So the fourth point is oil price surge and the economic sentiment. Nigeria is an oil producing economy. When oil prices rise, as we can see, due to the war in the Middle East between Israel, Iran, and the United States, countries like Nigeria is profiting. I must tell you the truth, but they will not tell you this. The government revenue has improved drastically. The foreign exchange outlook seems to have stabilized, and when Nigeria looks stronger, it results in increased investors' confidence. The entire market sentiment improves and the stock market rallies. Point 5. Inflation is pushing money into stocks. This one is the hidden force most people miss. Cash is losing value continually. So investors are moving into assets to hedge inflation. Stocks have become a store of value and an inflation hedge in this regard. This alone can sustain a bull market longer than expected. The sixth point is high interest rates, which leads to rotation into equities. This one sounds counterintuitive. Here is what is happening. Fixed income yields are high at about 15 to 20%, right? But top stocks are offering comparable or better total returns. So big money is saying, why earn 16% risk-free when I can get 25% plus and with dividends? Oliver Twist, huh? It is the nature of human beings to always want more. So right now, we'll look at part 2 of the video. We shall look at the hidden warning in this rally. So here is the part we must consider to talk about. The rally is strong, but not entirely risk-free. Number 1, there is narrow market breadth. To know that this rally can reverse back even with the momentum, right? A few big stocks are driving most of this growth, and if they fall, the whole market can shake because the growth is concentrated on only large cap stocks. So the other stocks, the mid caps and the low cap stocks, they are not enjoying such flow of capital into their own portfolio. The second hidden risk is overbought condition. So due to a few stocks benefiting largely from the rush of capital into the Nigerian exchange, some of these stocks are now being overbought. You should look up the relative strength index of some of these large cap stocks, right? Profit taking can quickly trigger sharp corrections on the entire market. The third risk is dividend driven rally. Who knows? Maybe after the dividend season ends, the momentum of the market will slow down. But I think this one is relatively inconsequential because it is just a small fraction of investors that invest based on this strategy of investing right before the dividend cycle commences. So I don't hold this particular risk in high regard whatsoever. So now let's jump into part 3 of this video, we will look at how smart investors are winning. So how do you actually benefit from the state of this market right now? We look at 3 strategies.
If you've heard something new today and you know that you are getting value from this video, kindly do me a favor right now. Can you hit that like button and don't forget to subscribe to the channel. This helps the YouTube algorithm to spread this video across to a whole lot of people that want to benefit from such information. As you do that, I appreciate you. Now, let's get back to the video.
Strategy 1, don't chase hype. You have to position smartly. Smart investors do not buy when prices are high. They wait for a pullback, right? It is wrong for you to FOMO into any particular stock during the market rally. You focus on value entry. You should buy stocks during pullbacks, and this does not mean that the market must retrace, right? You cost average as there's little or smaller pullbacks along the way, right, to maintain favorable position in the long run. Strategy number 2, you follow institutional money, right? You focus on strong companies like the MTN, the Dangote Cement, the Zenith Bank, those big companies. These companies are called the blue chip leaders in the NGX. These are where big money is flowing. So you might want to keep a tab on the orders and the trading activities of these blue chip companies. The third strategy is take profit. You have to rotate. You don't hold stocks blindly. This is not the time to be emotional, right? When the market overheats up, take some profit off the table. Then, when pullback happens, you can re-enter into that same stock. Right? Have it at the back of your mind that the stock market is almost like a circle. This circle tends to repeat itself. Forget that phrase when people say that I will hold this stock forever. I will never sell my stock. I think, from my own personal view, that is just foolishness, right? No matter how strong you think the fundamentals of that company is today, right? Nothing is promised tomorrow. You cannot tell what the company might become tomorrow or next month or next year or in the future. So the moment you see some uncertainties regarding that particular stock, the wise thing to do is to cut your position, right? You cut your position drastically of that particular company. Even the greatest investors of our time sold for profit. The likes of Warren Buffett sold his bank stocks in 2024. He sold to rotate his principal into other sectors or other industries like the energy industries and the consumer goods industry. If you want me to make a video to show you an explicit framework that has been proven to be ideal in taking profits, put in the comment section TRIM, that is TRIM. Put TRIM in the comments for me. Then I'll make a video to show you the best practice to cut your position from a particular company, if not entirely have a sell-off. So let me give you a bonus strategy. Let's look at strategy 4. Hedge your risk, right? Smart investors are not 100% in Naira investment. They are also investing in dollar-denominated assets. As much as I don't want to say this, don't have 100% of your entire portfolio just in Naira investment or just in the Nigerian stock exchange. You should protect gains from Naira depreciation or Naira devaluation, as they will call it. And different markets have their circles. If you have the skills, you could trim from, let's say, the Nigerian exchange, right, that is almost at its peak or that is at its peak, right, into the New York Stock Exchange that seems to have dipped. So you can get quality stocks at a discount right now in the New York Stock Exchange. So that is something that you should consider and you should look into, right? So when the opportunity presents itself, you can trim and rotate from one market into the other, right? Vice versa, and that goes for the New York Stock Exchange too. If the market has rallied so up, you can trim and go into the Nigerian exchange. That is a way to capitalize on, market variations. So on part 4 of this video, we look at this truth, right? This rally is real, but it is not forever. The people who made money are not the ones who arrive first. They are the ones who understand when to enter and when to exit. This does not make you a trader. Investors should also exit in their position when sentiments are not motivating to still stay in that particular investment. So do not tell me that because I sold a particular stock of mine, right, that makes me a trader. No, you can sell when you've done your research. You've seen that where this company is trading is not where you initially thought that they would trade. So you can sell at that point in time, and you can sell when you see new opportunity arising, right? When you see a breakthrough in the market from a particular sector. If you don't have fresh funds, you can also trim your existing investment and deploy it into that new trend if you deem fit. So if you are a conservative investor and still not comfortable going into the Nigerian exchange right now, right, hit that subscribe button, because in my next video I will show you 5 low risk investment products you can invest in right now to get as much as 22% interest risk free while you wait for the stock market to fully correct itself or to retrace, if that is what you are looking for. And also check out this video over here to see a 5-year comparison between the Nigerian exchange and the New York Stock Exchange to see who actually won in the end. Remember guys, wealth is not luck. Wealth is built from information followed with execution. Until I see you next time, peace.